Most families want to achieve success. The challenge is there's three major roadblocks that hinder that success. Number one is debt. Making sure they have a debt freedom day will ensure that they're out of debt fast as possible so they can take that money, put it to other goals and objectives that they really want. The second challenge that people face is that they die too soon. They die too soon with responsibilities, house, spouse, children. Making sure that a will and a power of attorney is in place is extremely important. The second area to ensure someone that their family is protected properly. Most families have too much premium and too little coverage. We want to actually do the opposite and give people a lot of coverage for the least amount of premium, so that family is protected after that person dies, so that does not become a challenge. The third challenge is people live too long. Let me give you an example of how that works. Typically have two phases of our lives: our working years and our retirement years. And most people in their working years, they have some money saved. They retire at the age of 65. They start drawing money from this account. What they didn't realize is how expensive retirement was, and unfortunately how long they were going to live. So they happily retire, but they do not remain happily retire. Possibly around the age of 70, 75, 73, this money runs out simply because they had no idea how much they needed here. What we do is we make sure that every single person we sit with has a financial independence number, FIN number for short. That's the exact amount of money that's going to be needed here to fund their retirement. Once we set the FIN number, we work our way backwards to their current age today and show them how much they need to save on a weekly or bi-weekly basis or monthly basis, however often they get paid, to reach their FIN number. Everyone has a FIN number, they just don't know it exists. In order to get a FIN number, we need to put together a plan. 2 steps to this plan. Number 1 is we need to set goals. Everyone has different goals and objectives, so we're going to create a customized plan to help families set some goals. Once we set those goals, we're going to show those families how to achieve those goals. Like I said, everyone's got different goals and objectives, and this plan is going to make sure that every family has a FIN number, a debt freedom day, and their protection needs are going to be taken care of. 3 other main areas we look at while we put together a plan is making sure we have a reserve account, otherwise known as the oh crap account. If something happens, we want to make sure we have money here, because the alternative is drawing from our retirement or drawing and creating more debt. Either way, it's not a good situation. The second area we discussed is education savings. If it is a goal for parents to save for their children's education, we show them how to double dip the government and save for college and university. The third area we look at is disability savings. That's for adults and children that have mental and physical disabilities. It's a wonderful program that people a lot of times are not aware of. Let me give you an example of how this FIN number works with a family. Let's say, for instance, someone is 40 years old and they want to retire at the age of 65. If they had no mortgage and no debt and children were out of the house, if they had $40,000 to live off of, that would be comfortable for them. That $40,000 needs to be approximately $80,000 in the future due to approximately a 3% rate of inflation. Inflation never stops, even in retirement. 3 forms of income we have at retirement. Number 1 is a government pension. Let's say in this sample, it's $30,000 per year. $80,000 is their goal. They're getting $30,000 from the government, so their gap is $50,000. Let's say that they have a company pension, and that company pension is $25,000 per year. Well, $80,000 is their goal. They have $30,000 from the government, and they have $25,000 from the company pension, which leaves us with a $25,000 per year gap. That gap needs to be funded with personal money. That's professionally managed investments. This will create the amount of money called our FIN number. In this scenario here, if we're to draw out 5% per year out of our retirement account or our FIN account, we would need $500,000 as a FIN number to create that $25,000 a year gap. Having a FIN number is extremely important, but making good decisions along the way, these three areas, and becoming debt-free is vital. And we believe that having a plan is the most important thing to do. Good luck and have great financial success.